All right, although tech stocks seeing some turbulence throughout the week, Amazon shares higher on the heels of reporting better than expected third quarter results. Amazon's profit tripled to $10 billion, citing strength from sales from cloud computing, ads, and retail. This boost helping the company to rebound from post-pandemic lows. Let's get the street's reaction. Joining us now, John Blackledge, Cowen senior internet analyst. John maintains an outperform rating on Amazon, raised his price target to $180 from $165. John, good morning. This is another situation where pretty excited reaction, or at least some relief in the reaction to the numbers last night in Amazon stock, but it just takes it back to where it was a couple days ago before Meta and Alphabet reported. What was the main thing that you think we should be drawing out of the results last night?
Yeah, there are a couple things. There was Mike. There was a lot to like here, right? 3Q revenue was above the high end of their guide, beat Street by 1%. As you guys are talking about, the operating income was huge. It beat consensus by 47%. We were street high going into it, and it was well above our number. And then the 4Q guide was very strong. Revenue growth bracketed the street, and then the op income guide was 7 to 11 billion. We were at 10.2 billion. Consensus was 8.5 billion. And so you have to look at the high end of that guide now, because they've beaten the high end of the op income guide by 30% on average the last 3 quarters. So that led to us, we kept revenue intact forecast. We raised op income and earnings estimates mid-teens annually next 5 years. And like you said, we took our price target to 180 from 165. So a lot to like there. Obviously, AWS was the big kind of debate going into it, and what was the revenue growth going to be. And they reported 12% revenue growth. Us and street consensus and investors were looking 12 to 13% growth. So they did just enough. But I thought CEO Jassy's color on the call was really big, and I think that's why the stock is up so much today. And what he said was, the cost optimizations that they've seen since last year are slowing down. Companies are transitioning to moving net new workloads to the cloud. He also called out 4 big deals that AWS signed in September that is effective in October, and they were bigger than all the deals that they signed in 3Q. So the key is AWS momentum is building, and in our numbers we have accelerating revenue growth in 4Q and then accelerating further next year. So that was big.
Something else he said was about the ad business, which we haven't talked about as much, but the margins are great. The revenue number obviously is a significant one in terms of percentage gain. And he said, I'm quoting here, they barely scraped the surface. What does that actually mean?
Well, yeah, so they're at almost a $50 billion run rate. He called out sponsored products or lower funnel ad units as being the driver. But remember, next year they're going to, for Prime Video, they're going to, introduce ads to all Prime members. There's a long way to go. If you look at it, right, Alphabet and Meta are about 2/3 of global digital advertising ex-China, and then Amazon's right behind them and building, and they have a lot of potential levers going forward. So we're bullish on that. And you're right, it was super helpful for the margin. One way that we look at the margin too is you take their operating income that they report and back out AWS, which they give us, and back out advertising at a 40% margin. And the rest of the biz losses are really shrinking. And that's a proxy for the retail business. On that math, in the quarter, rest of biz losses were about $500 million versus last 3Q was almost $7 billion. So they're doing a lot of things, on the retail side of the business to improve the profitability.